Welcome, everybody. This is CyberBulls, and tomorrow is Tesla's earnings. This entire call is going to be all about earnings, earnings, earnings.
Tesla is the most consequential company in the world.
I'm the bull on the EV business. I think the margins are going to explode.
Still the same company. Company is still executing.
The energy is bigger than the auto business.
I'm the young bull that talks a lot of smack.
All right, welcome everybody. We've got Alexandra Mertz, fresh off a nice, what would you call that, a honeymoon trip? You just came back for a week.
It wasn't a week, it was 3.5 days, but back I am.
So hopefully you'll maintain that happy attitude tomorrow. Jeff Lutz is killing it. Everybody loves the video. He just taught everybody about supply chain and the Tesla's cost advantage. If you haven't seen that video, go check it out. This guy's just dropping bombs. And then Christian, just very fiery. Sometimes he's very positive and sometimes he's negative, mostly negative. So let's get started right off the bat. I want to do a panel. Tomorrow's earnings day. Are you guys thinking we're going to be above the analyst estimates of, what is it? They're at 82 cents of earnings per share. They think that it's possibly going to get at 21% auto gross margin. What is your position there? And we'll talk about this too later, which is what do you see forecasts and the guidance and for? So let's go through the list here. Alexandra, you're first. Are you going to be optimistic or negative about tomorrow?
Completely new stance for me. I don't have a number. So why don't I have a number? Because I tried actually my two approaches of getting to a number, both bottom up and top down. And I always had the same problem. I don't know what this quarter's average selling price will be, ASP. Because you really don't know for each individual market when these price cuts hit in. So you can't just take the number of deliveries and put an average price on them. It doesn't work, right? So I was fiddling around. I come up with a range. So my range is between 80 cents and 95 cents, but that doesn't give me any feeling. So the market is, you're right, between 82 cents and 85 cents. There is obviously a chance we go well above it. There are some Uber bulls out there at $1.20, and there are some good reasons to actually have some upside potential. Like we don't have a foreign exchange risk. We actually have some improvements. We don't have any Bitcoin impairments. We probably have some more FSD recognition. So there's some technical stuff. We obviously don't have any stock-based compensation and options from Elon to filter in. So there are a couple of things that can improve the number. But if you don't have the key number of the average selling price for the car, which is in any formula how you do it is the key element, right? You're wobbling around, and that's my. So I mean, of course, I didn't have as much time either, but it really got. I always got stuck at that point, and I said, you know what, I'm not going to have a number. That's just it. So. And then I reassured myself, does it really matter? Because it doesn't. I honestly believe that even if auto gross margin would be below 20%, and even if OPEX comes down between 12 and 15 again, it is all for the good cause, which is making the cars more affordable, having a higher target market and expanding into new markets, while new products roll out, right? The refresh Model 3, the CyberTruck, and so on. So I'm, for this quarter, not giving any predictions, be it what it is. I hope it's not below 0.80, but anything above it, I'm just taking it as it is.
I love it. Thank you, Alexandra, because now I feel like the universe and the force has been balanced. Me and you are long-term investors, but we've been influenced by Jeff and Christian, worried about the next quarter.
Just good. It's just me.
Just you, worried about what's going to happen to the numbers. Oh my God, we got to just keep our eye on the ball, forward-looking. So go ahead, Christian. Tell me why I'm wrong.
No, so I agree with what Alexandra said. I don't really care about the numbers, to be honest, because they'll be what they are. I think the bigger thing is the macro. And I know we talk about a million times. What does the year look like, right? They could beat on the bottom line 5 cents, but if the commentary isn't good, and if 2 million isn't reissued or 1.8. We we'll go into it. We got people that follow this stuff for a living, and I'm not saying they're right or wrong, but a lot of people give a lot of credence to such individuals. I'm not going to name them yet. It looks a little bad, so that goes to the stock. Remember, when I talk, it's not about, for me, when I talk about on this show, it's not about mission. It's about short, medium, and long-term stock performance and the company, how they're doing, how they're operating. This is not a reflection on Tesla, the company. They are in a very difficult environment. They are selling cars. They're not selling, they're not Lululemon selling yoga pants for $50 that are considered expensive or $100. They are selling $50,000 automobiles. And when you get into an environment, and I'm not saying the economy is doing bad, but a lot of people talk about it. There are some job losses. People pull back on their spending. And the first thing to go is something like a discretionary item like buying an automobile. So if Tesla, in order to reach their volumes of 2 million, needs to continue to cut price, that may be a great thing long term and gain market share. But in the short term, the stock might get punished. That's all what I said yesterday. If they're going to earn less than they earned last year because they have to drive volume, and the only way they could drive volume is in demand is to bring costs lower throughout the year, then you're going to take a hit to margins and profits. And it's a story of earnings times multiple gives you a price. And if the multiple is not going to expand that much because we got the Fed hiking rates, and hiking rates is a direct line into Tesla's business because most people finance cars, it's just a very difficult environment for the stock. I see other growth stocks that are doing good, like a Chipotle, who sell food. Most people can go out and buy a $20 burrito. Yeah, it's expensive, but you know what? It's manageable. You put it on the credit card and I'll deal with it. But when you're trying to finance an automobile and interest rates are going up and your payments are now $800, $900, $1,000, it's a much more difficult ask of people. So Tesla's in a very difficult environment. This is not a representation of the company. It's a representation on the stock that we own. And the stock we own right now is in a difficult environment. So that's how I'll just kind of phrase it. So I think Q1, I don't know what'll happen. I think we could get a bad number and the stock could rally. I think we could get a decent number and the stock could go down. I really don't have an opinion either way. I'm just giving you my high level anticipation. So I really want to hear, of course, I think the commentary of what Elon and Zach and Drew say about the year going forward will be more important than the actual EPS print.
Your turn, Jeff.
Oh, I think they have a history of beating EPS, and I think they'll slightly beat EPS and continue to do well on the cost side. I think revenue may be a slight miss, with all the S and X and inventory. I think revenue could be a slight miss, and it has been the last couple of quarters actually. So that's the answer, like the direct answer to the question. But I do agree with Christian Alexander. It's going to be more about the guide and what's going on with macro. I have a little bit of a different take. There's information we have and there's information we don't have. So we know what happened in the last recession. I don't have to repeat that. We went through that in yesterday's show, and I could go through it again if others are interested. But EVs can grow and will grow inside of a macro auto decline. The thing we don't know in that data, and the thing I'll be very open about, is we don't know in that 16 to 36% decline, we don't know what it was by tier, by price tier of car. And you'd have to think that, it depends on what kind of recession is. Is it a white collar recession or blue collar? Like what is it? But you would think the cars at kind of the higher price points may suffer more. But I think that's data that's worth gathering to try to understand better. So my hypothesis is that Tesla can kind of steady demand throughout the year without tremendous margin erosion, and either steady demand, if not slightly grow it throughout the year, year on year. And they're predicting nearly 50% unit volume growth, so it has to be actually rather significant for them to be able to enable something like that. So I think this is a bit of a coiled spring. I think the spring is being pulled back. It's not all the way at the bottom, but this quarter, this Q1 may have been
the bottom. What is that noise? Yeah. Is that your phone?
No, not me.
It's coming from you, Jeff, probably.
I think it stopped. You're okay.
But anyway, so I think I'll just close it with, I think it's a bit of a coiled spring, and I think we're kind of nearing the bottom of that, and I think gross margins will improve.
Do you expect Elon to be on the call?
Mm-hmm.
Yes.
Yeah, it's a Twitter space. It's going to be on a Twitter space tomorrow.
I don't know.
You missed it.
It's on the Twitter space? Oh, is it?
Yeah. Yeah.
Is it a Twitter space or a Twitter live stream? They could just stream it live on Twitter. I don't know if it's a Twitter. Maybe it is. I haven't confirmed. I don't know.
Okay.
I don't know. We don't know where he's going to be, but it's. I would say it's. He probably wants to comment on on the economy and what's going on.
Yeah.
So I imagine he would be motivated, but yeah, we never know.
All right. I'll give you my opinion. I think that I'm very, very confident that it's going to be a beat, specifically an auto gross margin. And the reason I can be very confident is because, I still trust the management. I know some of you I know you, Christian, have been saying that you can't trust management anymore. They've failed you a few times. When Zach came out and said that he still believes we'll hit 20% auto gross margin by this quarter, I believe he said that because at that time, he knew something that we don't all know, which is inflation was reduced. He would have saw that at the beginning of any company out there, of any people out there. It's going to be Elon and Zach that has the most view in terms of what's happening with the price of cost of goods. I had a masterclass lecture yesterday from Jeff Lutz, and he, I guess, must have forgotten what he said yesterday, which is supply chain costs have fallen. And there's a lot of reasons why it could be a lot lower than people think. I know that a bunch of analysts are thinking that bulls like me might be overestimating how much it is. But I guess what I'm saying is that I'm pretty confident it's going to be at 20%. And then I think that it might actually be a beat because of further costs that hasn't been addressed.
Yeah. And that's fair enough, Herbert. But since you mentioned my name, let me respond. So you say I don't trust management. So I'm a realist. I've listened to many conference calls. There's lots of times, especially recently, that they make a statement and it doesn't happen. I'm not saying everyone's perfect. What I'm saying is if it happens over and over and over again, it diminishes the credibility of management when they say things in the future. So if you want to believe them when they say the energy business is going to be bigger in the future than auto, if you want to believe them that they're going to do 20 million cars in 2030, if you're going to believe in FSD longer term, then I need them when they say they're going to come close to 50% growth in 2022, and they don't even get, or close to 50, and I get a low 40 or what was it? Then that makes me question when, so, and I have other examples. So I'm just saying, like, you have to take, if you're going to believe what they say, you also need to call them on the carpet when they say doesn't happen. Is that again radical thinking?
No, Christian, you've got a point.
I'm not a fanboy. I'm an investor, and I love the company. I love what they've done, but I don't just blindly believe everything they say, especially if they turned out to be wrong. Go ahead.
They also say, it's just like you do, they always put a caveat, which is barring any macro changes, which is exactly what happened. So they're still correct when they made those calls. It's not like it says, I'm going to promise.
No, they're not correct when they make that call. The call was a few weeks later. I'll give you an example, Herbert. And look, I love the company, but this is a good back and forth. Elon Musk on Q2, when Shanghai was shut down, he said that they would grow 50 to 60%, 50 to 60%. And he also caveated with, and I don't even need the new factories. On a Q2 call where Shanghai was already shut down, we will grow 50 to 60%, and I don't need Austin or Berlin to do it. Now, you tell me how that is anywhere close to being good management and guidance. Explain it.
I don't know. Was that during COVID? They had to shut down the whole.
You didn't listen to the Q2 call, I guess. I'm calling you out. I'm saying, what did I say that's wrong?
No, that's fine. I still believe when Zach says
That's fine.
we'll hit 20%.
But I can believe the other. I can believe the other, and I want them, when they say something, to execute it or don't say it.
So do you think, Christian, do you think they'll take down the yearly guidance of 1.8 million with the dream number of 2 million?
If they don't think they can get there, they should cut it down now. Why wait? Because the stock will get crushed. If they finish the year at 1.6 after predicting 1.8 and maybe we'll get to 2, you think that's good for anybody? Come out and tell us macro's a little bit more challenging than we thought. We're doing our best. The investors will understand that and say, absolutely, you're still growing. It's a tough environment. Interest rates are raising. What I'm saying is, don't tell me you're going to do, 2 million again and reaffirm like 2 million and come in at 1.7. Is that crazy?
He did not.
No,
he said 1.8.
No, I'm saying,
and he said,
don't do
we'll
that.
talk about it.
Don't
he
do
said
that.
maybe 2 million. Okay.
I know.
All right. So somebody's still buzzing, and I don't think it's Jeff. So it's one of you guys, or well, maybe me. But let me ask this question. So I've got this tweet. I got this tweet from what is it? Oh, crappy. Sorry, guys. I'm not prepared. I got to share my screen first. From the analyst Dan Ives. And we're going to have, by the way, Gary Black joining us. He might be able to join us in about an hour. This is Dan Ives' tweet. And he's saying down here, the last sentence, auto gross margins north of 20% is a key street bogey. And he says the main focus of the street is going to be the margin of the business model. And auto gross margins is going to be the key thing. Do you guys agree that that's really it? It's auto gross margin that matters. If like I asked this question to a few people yesterday, which is what would you guys rather? Would you guys rather that auto gross margin beats but OpEx is kind of flat or low? Or would you rather OpEx is higher and auto gross margin? I think Dylan asked that question. So I'm just curious what you guys think.
It's a good question. What really annoys me is now this focus. I always hate it when we're earning call and everybody's focusing on this number. I'm sure 90% have no clue whether 20 or 21 or 19 is really good or bad or whatsoever. But now everybody's staring at this number tomorrow, and so the focus is, well, it's deserved because Tesla put it on the table, right? Tesla guided that that is their objective, and they are doing everything to maintain it over 20%. So the focus has been set up by Tesla, but having it now, just after 3 months, where price cuts were enormous, why the IRA was still all over the place, will we get it, will we not get it, whatever, where you have so much distortions, where you had the SNDX in transit, you have a couple of factors that can influence this 20% number, and it doesn't matter, yet everybody will focus on it tomorrow. So in my head, I'm actually prepared to purchase tomorrow and for the rest of the week more. I had some cash available and was holding it up until after the earnings, because I do expect the stock to go down. I hope I'm wrong, right? I mean, I'm hopeful myself I'm right, but I just believe that whenever we have these extreme moments where everybody focuses on one single dumb number, which can be influenced by so many other things, I rather be ready to take advantage from it.
And Herbert, let me just caveat what I said earlier. I'm being calm. I don't want, but you challenged me, so I came back. But I want to say it clear. I know you believe in management, and I've seen your talks. What I'm saying is, yes, you are way more exciting and believing, okay? And that's great, and that's what I love about you. But what I'm saying is, when I listen to conference calls, I'm just saying, I love management. I love what they've done. What they've done have been incredible. I've said that a million times. But what I'm saying is, when they say stuff, anyone on that management team, you don't just say stuff to say stuff. When they say stuff, we're listening. So when they say it, so you're looking at me weird when I say this. We believe them. We're supposed to believe what they say. Now, if they are wrong, that's one thing. But if they say things and they're massively wrong, and then there's no couching why it was wrong or something like that, what I'm saying is you can lose credibility. So when you say, why isn't Tesla, everyone buying it up? Why isn't this happening? Why isn't that happening? Because they could be losing investor confidence. You want me to, I've been going through teaching you about how stocks move and investing. If people over the quarters don't believe and trust management, Gary Black, if he's going to be on the show later, that's one of his big things as an investor. If he can't trust what management says, Sometimes he always says that I don't trust management. I have to do my own research. But if management says something and then what they say doesn't happen, don't you, on any company, wouldn't you then, no, you just keep believing what they say?
I guess what I'll say to you is that let's debate this, but I don't, how much is loss in trust in Tesla management the reason why the stock is down versus when you see earnings are lower, then analysts incorrectly take that number that's low this quarter and they go and forecast it for 2 years later, and because they do discounted cash flow, that's a mistake. That they're just looking at numbers. They're not. I don't believe that it's because I've lost my trust in Tesla management, so I'm gonna back off my investment.
I agree with you. This is not about earnings. This is not about any of that. The only thing you disagree that I believe that I don't trust management. What I meant by that is there has been some things said over the last few quarters, going back to Q2, Q3, and Q4, that were completely devoid of reality. So you could just sit there and say, oh, it doesn't matter, 2028, and that's fine. What I'm saying is I look at and I listen to what they say, and if what they say completely deviates from what occurs, I think that they should be held accountable. Radical idea.
What I would say is, well, first off, I think we have a new thumbnail clip for Christian. I'm not a fanboy. So instead of the
also energy drink. I think we should warn everybody about his new energy drink.
Yeah, we should warn him. Sorry, I got him hooked on that.
You can blame Jeff for that one.
Yeah, it's a good investment too, I think. So now I think that's why I think we have to be smart as investors. I think Christian brings up a valid point. And you have to be able to fill in. You have to kind of gather your own intelligence about companies and understand how things work. And if you're not an expert in a certain area, like there's areas I have no expertise in. I lean on people like Alexander. I lean on other people in the community, or I lean on Christian for macro. And that's what you have to do. And then you build that entire case together and say, well, is this investable? Should I be adding my position? Should I be holding? But you have to be able to fill in your own information. You can't just look at the transcript of the conference call. And I don't think that's what you're saying at all. You've got to be able to kind of fill in your own information. And my thesis is that the analyst community does not understand cost structure as well as they should or could. And that Tesla has the capability to surprise on cost structure.
I agree, but I would still. I mean, I know I'm wrong because you already told me, but I would still. And this is the third quarter I'm saying that I would still prefer Elon was not on these calls. Why? Because Elon gets, optimistic. He's having his longer view vision. For him, 1.8 or 2 million. What the heck? It's a minor detail on a long road to Mars. So this is the third quarter I say that I would just love a boring earnings call. Zach, Drew, maybe now Tom, couple of information, no product information, couple of dates, what's coming up, goodbye, and done it, and not overhype it. And this overhype then creates this whole flux what Christian is referring to, because you're right. I mean, we've all lived through these quarters. We all know it's right. We prefer to forget it, but it is what it is. So, but I mean, like I said, it's the third quarter. I'm going like, please, you're busy with running for Twitter and now Truth GPT, and I don't know what, do it, but let the other people execute. The one thing I so loved about Investor Day was seeing this deep bench, these people so motivated of making these the best cars ever at the lowest cost ever. Let them do their job. I mean, we don't need all the time motivator Elon getting us there. We know this was a tough quarter. Everybody expects it. We're fiddling around if how bad was it, or is there still a little bit of upside? But just get it over with. The quicker we're over with it, the better it is, and the quieter it goes over.
All right. I want to jump in again if I can.
Please do.
Please, guys. Please. Tesla is kicking it. Did they not announce a Giga Shanghai Mega Pack factory? Did they not announce Giga Nevada expanding? Did they not
Herbert,
sell?
But you were asking. But you
were asking
earnings.
about us about
earnings.
the Q1 earnings. You're not asking about Gigafactories being built.
You were talking about trust in.
You've been
trust
talking to
in,
Randy
Tesla
Kirk
management.
too long. Randy Kirk, I love Randy, but you and Randy go on, and it's a $20 trillion company by 2022.
I'm not.
I'm going to give you a dose of reality because
I'm
you're in
not
la
a
la
Super Bowl.
land with
I'm
that.
not a hyperbole. I'm nowhere near a hyperbole. I'm seriously thinking about just what I look. So I explained to people yesterday, right? I'm
just playing with you a little bit, but this is a reality show here. This is
We're having fun. We're having
We're
fun.
all talking it up to 20 trillion by next year. Yeah.
I'm a long-term investor, but by background, I'm a startup investor and I'm a product manager. I love companies who build great products, who have great strategies, who are attacking a massive market. For me, obviously earnings matter because it's one signal to show that they're actually achieving their strategic and objectives. For me, this company is knocking out of the park. And sure, maybe this quarter, the margin is going to be lower than expected. Oh, why didn't they hit what they said they were going to hit? Well, Mr. Christian Valente, you're the guy that told me about the macro. Have you forgotten about the macro?
Because we're on the show. I'm giving my opinion. What I'm saying is I don't care what they earn this year. You see, you're confusing me giving information and thought processes at the moment for what I think or what I believe or what is good and what is bad. I'm giving you my analysis of the macro environment. I'm giving you my analysis what Tesla stock will do in that environment. I'm not saying I'm right, I'm wrong. I'm giving you what I think. Now, if you want me to just bubble gum it, and I'll do that. But I'm not. That's not what I do. I give it raw.
In the startup video, in the startup, you said the margins are going to explode.
I know. Herbert put that in.
Herbert, play that. I'm just kidding.
They will. They might not.
That was last
year. That might be 2024 when they explode, or 2025. Because they did explode. They did explode in
we're mixing
years
some things
before
up.
that.
I'm talking about trust in management, and then now we're talking about Q1 earnings again. Okay, so I want to show something here and see what you guys think. But this is Piloli on Twitter, and he showed kind of what's happened between the orange, which is the street consensus of earnings per share, and the green, which is what actually happened of non-GAAP earnings per share. And always, it seems to be that the analysts are always below, and that they're at 85%. And so, I think I'm just asking, is earnings per share the mark? Is it out of gross margin? And if they do beat, what are you guys going to think? What would happen?
Wait. Yeah. Not so quick. I mean, yes, they're always above it, but they were especially above it in 2021 and beginning of 2022. It is getting much more narrower now. And so, yes, I love this graph because more or less in the center is the biggest gap. So you love seeing that. They are getting better. And I mean, when the market expects, let's say 0.85, because there's still people all over the place, and we have some CyberBulls going to $1.20.
Right.
I mean, this is nearly 50% higher, right? You don't invent 50% higher. It's just not possible. So maybe I'll eat my tongue tomorrow, but it's, we have a couple of people in this community that are so motivated by showing the good side of it only and don't take into account the challenges that are there and that things need time. I mean, I'm still much higher than the $4 for the whole of, they're actually below $4 now, earnings per share for the whole of 2023, right? Because I do believe the second half of this year, most of the issues we're going to face now are well behind us. But I do believe the market has a point in looking at this quarter being particularly complicated.
Here's a question. Has all of this kind of worry and angst been priced in to the stock? It's been under pressure, right? It's gone up to the 200-day a couple of times and failed. And there's been kind of just one story after another. There's been, I think there was a price target reduction yesterday. The question is it priced in? It's the price action going into earnings is, I don't know if I'd call it weak, but I wouldn't call it strong. So and
we were talking about this earlier. I have no definitive view on where the stock is going to go after earnings. But I think there could be bad news and the stock could rally because, like Jeff said, it has been punished a lot. We have been building a base. If there's more buyers than sellers, it's going to go higher. It's that simple. So there might be something in that call that people love. It could be the energy business. that, I'm not saying, I'm just saying it could. Something could be shown on Q1 that the margins are getting better, or maybe something hit that was building from last year, and a big sale, something like that, and it could trigger some people say, wow, the energy business is starting to move. So you could get a stock movement on that, and the auto margins not be great. So this is very complicated to know.
It's the most complicated one in a long, long time. I completely agree.
It is the most complicated, but I'm your student, Christian. I've listened very closely to you for the last year. I've learned so much. And what you taught me, I keep repeating your words back to you. What you taught me was Tesla is a story stock because it's a growth company.
Well, so I never said story stock. I think that was Randy. Randy for the story stock.
Stop talking about Randy. Randy's very, very uber bull.
He's traumatized.
You've done like 5 interviews with him, so I
doesn't mean like I'm out uber bull. Okay. So a story stock, right? So it's about the narrative, right?
I said it was an earnings machine. And now hold on. I said it was an earnings machine.
That was a long time ago. Yeah.
No, that was like 12. Now, what I'm saying is the earnings have pulled back because of macro. So I don't keep my blinders on and say it's still an earnings machine. It will be.
Right.
But in the interim, the earnings have pulled back.
Yeah.
So
here's what I think the story might come out tomorrow. Okay. The number one story is price cuts. Did it impact margin? And if we see that tomorrow, if there is a gross margin about 20%, I think that's the narrative, is that price cuts did not cut the gross margin. That means that they were able to reduce the cost of goods so much that they were able to maintain that. That will then cause the stock to be much more viewed favorably for the rest of the year. That's what I'm thinking, is that if they think that they cut the prices because demand fell so much and then they're sacrificing margins for that reason, that's another story. Then it's going to be negative for the rest of the year.
So you're right,
I think
Herbert.
that's the critical thing.
Yeah, you're right. So let me look. This is a show, and this is good for people to understand. So that is the key. So from Q4, we know kind of what the COGS were and what those report were. Is Q1, is 1 quarter enough to see these improvements in costs to offset a lot of the price cuts? I don't know.
We have the expert right here. We have the expert right here. Come on,
Jeff can comment, and he's very good, but I'm just giving you a general point of view. Because it might take, when Tesla says, yes, costs will come down, that might be a 6 to 12 month story through 23. It might not show up in Q1. So investors, they're not the brightest bulbs all the time, and they're just going to react on what they see on the print. And if the print isn't exactly what they thought, they're going to sell the stock down because the margins isn't where they want it to be for that moment. It doesn't mean that margins won't get better as the year progresses, like a lot of us think. So go ahead, Jeff.
Yeah, I'm just going to say, I mean, Model 3 was on in production for 20 quarters since its first, volume production quarters, which are really in 2018. You don't count 2017. They weren't making any money on a Model 3. Basically, in 20 quarters of production, Tesla publicly has claimed they've taken COGS down 30%, again, normalized for commodity costs at those 2 points in time, which is actually the right thing to do when you're talking about your ability to reduce COGS. So if you look at what Tesla is building in their factories, it's 3-to-1 Model Ys now. So Model Y has been in production less. So it's not as far along on that journey. And it's starting from a little bit of a better plateau than where Model 3 started from a cost perspective. So my point is I think Model Y actually has a fairly decent runway ahead of it for cost reductions. And I also believe that these COVID economies, they're called COVID economies, by the way, in terms of like all the cost adders from COVID, logistically, commodity wise, labor wise. The commodity stuff is rolling over. Some of it is very quick to see. Some of it will take, maybe 1 or 2 quarters. The logistics stuff is very immediate, it depends on their contract. So why am I saying this? Again, I think they're going to surprise. I think there is. So if the question is there going to be any impact on margins? There'll be impact on margins from the MSRP reductions, but it's not going to be as dramatic and as long as I believe that people think. And I believe Tesla also believes that as well. And that's why they guided, they took these kind of quote unquote massive MSRP reductions, but they're still guiding higher than 20%. And people are like, how can they do that?
3 months ago. Yeah.
Yeah.
3 months ago. And there I would like your opinion, because yesterday I know you talked a little bit about it with Herbert, and Herbert spoke with Amy about it. I'm not a big fan of these flexi pricings, right? Of these prices jungling around plus 2,000, minus 2,000, whatever. I feel like a car buyer, especially a new Tesla car buyer, not us with repeat buyers, but most of the growth will come from new Tesla customers. They take their time to understand what EV they want. They see a price. Now they go there a week later, they say a different price. And if it is true what Amy says, that they're aiming for a close pricing model comparable to airplane seats, right? Where you will have Los Angeles, Boston one day at $400 and the next day at $350, and the same way. I'm not sure the car customer is ready for that. And then the other question I have is, what do you think is the percentage of people that really outright cash buy a car compared to financing it via their bank? So it's not Tesla putting in place the financing, but they are having a financing model in place where this movement in the price actually is a perturbator in their whole calculation. And then will they delay it thinking that maybe it goes down even further? And does the price finally become a subject by itself, right? Not only the price cut, oh, wonderful, now it's cut, now let's buy, but oh, now they cut once, now they cut twice, when will they cut again? So this whole dynamic, I'm not sure this is really acceptable to a car buyer. I don't know how I feel about it. I'm quite uneasy about it so far.
Yes. Yeah. And I think you bring up a great question. So let's just attack it, piece by piece. One is this perception of these rapid cost changes. I believe this actually occurs in ICE auto as well, but it's between the OEM and the dealerships. And I believe that there's a lot of movement between those two. And there, quite frankly, is probably a lot of movement between the dealership and the end consumer, but none of those are advertised because they kind of take care of everything in the form of different spiffs and different incentives. And they have so many different buckets where they can hide costs. They can sell you a service plan. True. They can do all these different things. So I think the optics of what Tesla is doing is unique. And I, quite frankly, it's a personal thing. I don't prefer it either. I think knowing how these companies work, there are people inside of Tesla that are paid to know not only the present cost of every component, but what they will be every quarter. They're supposed to predict this. And there's also people that are paid to predict what pricing should be relative to various ASP tiers. Excuse me. So I would prefer that they continue driving the MSRP reductions, but they kind of group the changes as more closely together as possible. I think that's in a perfect world. I think right now what's going on macroeconomics wise, I think it's making it a little bit difficult for them to do that. I think if the macro was more steady, they'd probably be able to spread these pricing changes out. And it was funny when we went through the presentation yesterday with Herbert. I mean, I didn't realize it when I was doing my research, but the first kind of volume production quarter for Model Y was, Q2, Q3 of 2020. And they did a $3,000 price reduction. I remember picking up my Y and asking the Tesla store of like, hey, am I gonna have this price reduction when I pick up my Y? And it was just launched within the last 6 months. I don't think people realize that Tesla made, a 6% reduction in the MSRP, 6 or 7%, right within the first couple quarters of launch. So, and then this variable pricing model, I think Tesla wants to be agile with pricing. I'm not sure they're going to go to the airline industry extreme, but it's an interesting analogy. And I understand why it's brought up. I think it's interesting, but I think things will normalize. And what I wish Tesla would actually do is I wish they would kind of at some point message of like, look, we're going to meet what the market needs, but this isn't going to last forever, and kind of give everybody kind of like, you got a little bit of time, but these prices could be going up really soon. But I just want to remind people of just 2 quick points. One, they reduced the price of the Model Y, brand new in production, $3,000. The second thing is The Model Y long range is about the same, maybe a little bit more in price from that first volume quarter of launch. So it's just, there hasn't been this dramatic change. And the COGS of the car are the highest in the first quarter that it's built. The highest there will ever be is in the
Until
first
your
quarter.
Gross margin was
built.
over 20% on the first year. Yeah.
At a macro level, right, for the company. Yeah.
I have a different opinion than all of you. Seems
Oh,
to
there you
happen
go.
quite often. I don't know why, but maybe, I don't know. I think differently.
You're just brighter, right?
I've become brighter because I talk to more people. Okay, no.
Oh.
So my opinion is this, right? Which is I'm very, very happy with the price variability model that Tesla's doing. The more accurate they can do it by day, by hour, very happy with that model because they're going direct to consumer. And then that allows them to do it by location, by I know they're doing across the board, but it just lets them adjust immediately to any kind of changes right off the bat. Okay. And it's not just price cuts. They will do occasional price increases depending on certain models and trims. And for right now, I actually think it's been a massive benefit to Tesla because every time they do a global price cut, the legacy media goes out and tells everybody, and they report it, umpteenth times on TV, on news, and everybody, they report it. And so the consumer's perception of Tesla right now is that this is very, very expensive. Only $100,000 car. They're still thinking of the Roadster. They're still thinking of the Model S. And now they're realizing, oh, what? And every time they cut price, they're going to look at it and going, oh, it does. Now I understand it's cheaper, it's as close to a Prius or a Corolla. So it's all fantastic for us. I don't know why we're all complaining about this.
So
and
Herbert,
I don't buy into this. I don't buy into. Wait, I'm not done. I'm not done.
Okay.
I don't buy.
When you're done, I
don't buy.
respond. Yeah.
Yes, I'll reserve it for you. I don't buy this idea that, people are going to reserve their buying of their car and they're going to wait until it further cuts. It will just take one quick, we're just bumped it up by $2,000 and then boom. It's like people realize it's down and it's up and I can buy it whenever. By the way, what did they do with the car? It's the same Model 3 that I bought in 2018, right? 2020. But they keep changing it every quarter or every month. There's always something different up and down. What's new about this? That's the model. Whatever it is right now, that's the price. That's the value that you're getting.
Fair enough. So let me just respond. You may be 100% right, and the people you're consulting with might be 100% right. But I'll also give you the flip side of that. If I'm a buyer, and I think Alexandra and Jeff kind of alluded to this, and I'm thinking about buying the car, and I see every few weeks they slash price by a few thousand, and I'm in a tough macroeconomic, I might lose, I'm not sure about this big purchase. I might just wait another month to see if it comes down another couple thousand. I might wait because maybe I have a car that's running. I need a new one, but I could probably get by another year or two. Let me see where this goes. Maybe I can get this car for $35,000 in 6 months. I don't know. That could go through some people's minds. And if that occurs, demand goes down. And what are they going to have to do? They're going to have to reduce the price lower because they're not getting the buyers to come in to meet the production capacity that they've already outlaid. So that's something to think about too. That's all I'll say.
So, Herbert, since you're so bright and fantastic, so they don't need there you go. They don't need advertising, of course, right? You wouldn't be for advertising. So how will the commoner of this world who is not... Oh, you are? Okay, so tell us.
Oh, great. Oh, okay. Well, that would solve some of it, yeah. We didn't know that.
Okay, so first of all, there's no doubt in my mind that Tesla will go into advertising. There is no philosophical, people think that Tesla is just philosophically again. Elon is not going to ever do it. He was interviewed by Tesla owner Silicon Valley, and he said, maybe I should probably eventually advertise because, it's one way to stop the media reporting negative news. You need to kind of play the game. But right now, as you're a startup and you're building a company, and I know it's 20 years old now, so it's not a startup, but you build a great product. That is enough for people to know it's a fantastic product. And I'm not against them doing advertising. There's no reason why. And they're currently doing it now. Did you see the uptick with Tesla being able to, Tesla Doc in Twitter reporting everything? And I know, social media is a very powerful way to do it. You don't necessarily have to do legacy media advertising, but go ahead. Go ahead and do that. Not an issue with me. And then this issue about cutting price like I said earlier, do you guys think the Tesla management are idiots? Do you think that they don't know how to do the simple math of taking, if I cut the Model Y by $2,000 times how many I sell per year, I'm going to lose billions of dollars, versus if I just take 100 million and do a global, they know this calculation.
No,
They've done this.
Herbert,
they understand.
Herbert. No, hold on. This is just a flip. So I agree with you. You're a promoter. You run businesses. You understand advertising. I'm surprised you don't think about it more. Talking about safety, promoting that. I said yesterday on our space, how many people, if you survey the country and said, who is the best auto manufacturer in safety? I believe less than 10% would say the word Tesla. A lot of people buy on safety. So what I was saying is, if people see that value, they might pay up a little bit more. No, let me say one more quick point and then I'll shut up.
No, let me pause you with that.
Okay, go ahead. Then I got one good thing. Go ahead.
The number, there was a recent survey that came out, very well done. The number one reason people are not buying electric vehicles is because of cost. So even if what you need to do is market cost. As soon as Tesla is seen and understood by the general public that it is equivalent, it's already at price parity.
Go look at what you can get a Model 3 for now, and imagine the gas savings and charging at home. It's cheaper than a lot of these cars.
They don't know that.
Yep, they don't know that.
How do you make them know it? You advertise. Okay, my brain's going to explode.
Okay,
hold on. One other thing. I got to say this because it's going to blow your argument about advertising. It's going to sink like the Titanic. Tesla themselves on the conference call cited advertising spike when the other advertisers, and they said their sales spiked. Okay, now your mind's going to explode with this one. And everyone that hates advertising in the Tesla community, their minds are going to explode. Imagine if it wasn't their competitors advertising. And Tesla actually did an advertising talking about they're the safest car in the world. We have charging networks all across the country. You can get through. You can charge at home at the convenience. You never have to go to a gas station and fill up for 50. Imagine that, what that would do when Tesla puts it in their chart. What do you say to that?
No, you're right. I want them to advertise. I'm not against it.
Okay,
it's a small amount of money.
Do they do the numbers? You're telling me if Tesla didn't put 500 million and advertised on, say, CNBC or through some YouTube or some other network or some digital media, you don't think that would help them control price a little higher than where it is now?
I guess what I'm saying is
exploding. If they advertised on CNBC, they'd actually have to say nice things about Tesla.
Well, that too. That would be another benefit. But
you have to get all new hosts and all new anchors, everything.
Right, but what I'm saying is that the larger part, I don't want the larger part to get lost on Herbert. They cited other people advertising and their sales exploded. What happened when sales exploded?
Right.
People want the product. They don't even care what the price is. So I'm asking you a direct question. What would happen if Tesla did their own ad on the Super Bowl?
Right.
Would the sales explode even more? Or would they tank and said, oh my God, Tesla did an advertisement. I hate them now.
My head exploded because you made a good point, which is when the Super Bowl ads were done by competitors, sales did explode with Tesla. So, it's a proof that Tesla's sales could increase because of advertising. Okay. I think it's you.
Me?
I don't know.
Let me mute myself.
It's Christian. It's Christian. I just muted him and then I need to mute you more, Christian. Yeah. Got the control. There you go. Oh, it's not Christian. All right. I lost my train of thought, but you're okay. You're correct with that. I'm just saying to you again, do you not know that Tesla will not know how to do this and whether or not it makes sense? So they will advertise. They're deciding when they're going to do it. They don't need to do that right now because their production is enough for demand. That's what I'm telling you. I don't know why you guys think.
Now, these are important points because we can say whatever we want. Now, look, Jeff's here, so he could, put me upside the head and hit me with some good facts. It looks like, now I'm just a simple guy. It looks like production was the same for Q4 as it was in Q1. That's a fact. And it looks like, for whatever you want to say, and we can make reasons up why, and I get it, that inventory is building a little bit. And I know from Jeff that you can't count on that. But I'm saying there is enough evidence because of the macro environment, it's harder to sell cars. I think we can agree on that. So if it's harder to sell cars, in one of the worst environments we've seen in a decade, why would you not pull different levers other than just reducing price to try to sell your product, such as possible targeted advertising? I don't know why that's controversial. I don't. Yeah, whoever wants to tell me why I'm an idiot, go ahead.
No,
We're all,
well,
we're all fighting.
anyway,
I'm just playing. Why I'm
anyway,
wrong.
there's a
Why
line
I'm wrong. We're just
forming.
having,
No, just kidding.
and I just want to say we're all friends here.
Yeah.
We're being real, but we're all friends, so we don't take anything personal. I don't think Herbert does. So we're just having fun.
No.
Yeah, no. You're bringing up Christian. You're bringing up the points that a lot of people probably think about, and just on the inventory side, there's smoke. I would agree that there's smoke, but the I don't want to go into a whole inventory dissertation. I just say in 30 seconds or less, when they're increasing, they are increasing the rate of production out of their factories. I know the number, the 440, that there were similar numbers, but they are increasing the rate out of their factories, and they're also increasing the number of nodes that they're delivering to. There's new regions, there's new countries, and so forth. And with just those two variables, they're going to, and as they grow that further, they're going to have to carry more days of inventory. And it'll be one of those things where there's a local maximum, and then it'll kind of come down. As long as it's not some massive number over 20, I think we're in good shape. I think going from 12 to, first off, nobody that I know of does annual DOI. Nobody. You look at it quarterly, and then you look at aging of the inventory, which nobody outside of Tesla will have. So I promise I wouldn't go longer than 30 seconds on it. Other than, I think we need to see a check-in from Tesla on like what they're doing with this inventory kind of going forward and what's the aging on it. But yeah, in terms of awareness, I know we have a lot of anecdotal things that we see and hear with our families and friends and so forth. There's just their awareness of Tesla. But I think if there was a way for Tesla to analytically go out there and poll, use Twitter, use whatever, to poll the understanding of like the audience of people that are considering or maybe the audience that are not considering buying an electric car as their next vehicle. I think from there you can kind of understand, like, is there an opportunity to advertise for education versus this advertising to spiff sales every quarter? Because that little sugar high, I think there's people that agree and disagree on that. I'd be interested to see in the Tesla community, what's the agree or disagree level on the advertising for education about charging your vehicle, about the safety of, like, you're in the safest vehicle right now in a Tesla. And as FSD advances, I think it's already 5 times greater than a human. But as it goes to 10 or 100 times greater or safer than human driving, you'd want to know that I'm putting my family and myself in the safest vehicle possible. So I think disaggregating the education side of it and the advertising for quarterly spiffs is probably where the conversation should go.
I completely agree. And I think it's actually my computer making the sound. Sorry, Herbert, I can't turn it off now. But the one thing I thought yesterday when we're driving back home, we have all these wonderful YouTube channels or soon Twitter channels where people are talking Tesla on a very high level, right? I mean, when I started investing into Tesla, it took me about 6 months to a year to even understand what you guys were all talking about. Because I mean, I came from the finance side. I think the finance and governance side, I still understand a lot, but the car itself, first time I saw Oma driving FSD, I was like, sitting there like a kid under the Christmas tree. And one thing that is desperately missing, and I would have the time, I would do it, but I don't have the time for it, is a really basic talking to the common people. What is an EV? What is a Tesla channel, right? How do I sit in a Tesla? How do I drive a Tesla? How do I charge my Tesla? And in a nice way, right? From somebody that is an influencer or that has a nice way of presenting that. I tell you, there will be millions of views. People have a high barrier of entry into purchasing an EV. I see it with people that I know. I always go to the next car is an EV. Yeah, it's an EV, but then they don't buy an EV because they're not educated to understand what to do it. And I know that if you say that to Elon and all these engineers, they look at you as if you're, but I mean, there are 50-75% of the people out there who have never sat in an EV, who don't know how to approach it. And I think this, I mean, for somebody who is passionate about that and can break it down for the more common people, I think there's a huge money to be made on a good YouTube channel sharing this enthusiasm for EVs on a very easy to understand level, because there's nothing out there. There's just nothing out there to break this barrier.
Yeah. Tesla Joy and Tesla Raj do that. They do a fantastic job. Tesla Joy. Highly recommend people to go watch our channel.
Yeah, but I'm
you're
also
right,
saying, yeah,
not enough.
the company, if the goal, the mission is to get advanced to sustainable energy, why wouldn't you want to go as fast as possible? And
you
if
just answered your own question.
No, the product is so valuable. Why would you not want to promote it and try to reach the people in the middle of the country that have no idea Tesla even exists?
You just answered your own question, which is,
good.
Do you guys? This is fundamental. It's okay. It's a fundamental decision right now. Do you guys think, all three of you, that Tesla does not know the benefit of advertising? That fundamental things. I don't think there's a benefit to telling everybody
I don't
about
think
safety.
they know.
They know.
I think no, they don't.
Know.
No, they don't.
It's a
not
trust
their
of
world.
management.
I'm going to
or
be
not.
arrogant.
It's
I'm going to
not
say
their
Elon
world.
has been stubborn, and he refuses to do it because he wants to. I don't know. I'm going to take a wild guess at it. That maybe he thinks he doesn't want to be like Legacy, the word of mouth thing. But you're right.
No.
He said in the interview, "I'm not opposed to it." But I don't know.
Bought Twitter. It's all about
he's at a
advertising.
Twitter ad. He's doing now trying to get advertisers onto Twitter. So obviously he thinks that him going to an advertising event is going to help get him advertisers. Why don't he just stay home? Don't they know just to come?
Okay, this is what I'm saying. It's not like, I don't think Tesla management are idiots. They know
need to
these
use some
simple
logic
math. They
here.
know
I think
that they
logic
can do
is
this.
lacking.
Yes, it's because of supply and demand. It's because of okay. I threw this out as an idea, is that what happens when you continue to lower your prices but maintain your margins? Okay, that has to continue to margin, because I do not believe this idea that Tesla's just going to just crap margins unless there's a massive macro that they need to survive and save themselves. But if you lower your prices to the point that it becomes price parity with gas cars, without needing to calculate the gas savings or the service savings, maintenance savings, if you're already price parity, that alone would be a titanic, what's the word?
Herbert, let me ask you the question,
moment.
Because I think tomorrow will bring an answer, but you will always tell me that was not a question. If tomorrow, let's say auto gross margins tomorrow are still 23, then you'll tell me, you see, they can do auto gross margin without advertising. Why would they advertise? If tomorrow auto gross margin are 19%, you're going to tell me, see, they don't have enough money now to advertise. In both cases, you're going to give to me that you can't advertise now, right?
I'm not against advertising, guys. I'm just saying, why spend so much time worrying about this? Let management do management.
They're in the business of selling cars, and if you're in an environment where it's difficult to sell cars, wouldn't you try to do different things to sell the car other than just slash price?
So you're just thinking that they don't know this. Oh, thank you, Christian. I
didn't
realize I should advertise.
I think they know it. I think they're stubborn in implementing it.
No, and I think they wanted to hit hard with the price cuts. I mean, who else cuts prices between 6 and 20%, right? Out of nowhere, very quickly, and very, very quickly, what was it, 2 weeks into Q1? I mean, I think that was really a decision taken that we're going wide, we're going to try to find the biggest addressable market, and let's just go all the way.
So that's my point. This is my
go ahead.
This is my point. Thank you, Alexandra.
I'll let you talk. Go ahead.
Thank you, Alexandra. My point is, they know that they could advertise. They're not dumb. They figured this out. There's a reason, a strategic reason they're cutting prices. What happens?
You're right, Herbert.
What happens when they cut the prices today, and what is going to happen to their competitors? What's going to happen a year from now when they become affordable? The car becomes super affordable, and more people buy the car. Then they can have FSD. They'll make up their margins later. They will be able to kill, and not that they necessarily need to. What happens to their market?
Go ahead. He's walking into so many traps.
Exactly. The one thing I do believe nobody in the whole Tesla management even thinks about is competitors. I don't think a second that they were going like, we're lowering the prices because we kill competitors. It's a consequence, no doubt about it, but I don't think that's the motivation at all. Zero, not at all.
So I agree with Alexandra. I'll just say my little piece. Elon knows that Tesla, I don't think, can do it alone. I thought they're the only one really trying. But if you're now saying he's doing this so he just kills the competition to go bankrupt and Tesla's the only, this is new. Because the thing was, we want to promote EVs. We want other EVs to be made. Tesla can't do it all. Now you're saying, no. We're going to crush everyone into the ground and Tesla is going to run everything. So which is it?
What I'm saying.
Which is it?
I'm not saying that. I'm not saying that that's that they would never make that to be their goal. Oh, let's go kill the company. No, they're not doing that. I'm just saying that there's other strategic reasons why they're doing price cuts that sets them up for future growth and success. Like, let's say FSD margins as an example, right? Or affordability is his goal, because affordability just explodes the addressable market. Okay, so
I agree.
I'm not worried.
Let's have a good question, and this is for everyone. I'm going to call it education. Elon said he's in favor of it. He would get better publicity. Tesla's always gotten bad publicity, right? So at what point do you turn on what he said he was going to turn on in the interview? Is the publicity going to get better? Is the macroeconomic environment going to get better? At what point do you say what he said? If he said he was going to do it, do you do it? Under what scenario, Herbert, do you say this is the time to do the thing Elon said he was going to do? When do you do that? I'm curious to know. Really, I am.
What do you mean? What exactly?
When
I'm
is
confused.
it? Elon said, Elon said, at some point, I think I will advertise to help the publicity. So I'm doing a duality. I'm saying publicity. I'm also saying help selling cars, because if you advertise, you might get more people in front of it. And if they know about your product and the value it brings, they might buy it. So I'm asking you a legitimate, very fair question. When do you turn that knob? If not now, when would you do it?
I want them to do it
I have an
now.
answer. But I have an answer. How about once we have the $25,000 car? Because then you're really going mass market.
Okay.
That's very good. And you have the ability to address, you have to have at least Mexico up to be able to build, like you said, enough cars to.
So that we're probably not getting that. I saw a report. It could be another year. We're looking, possibly late 24. So you would not do anything with education or advertising for at least another year and a half.
No. I would do it now.
Okay.
My answer was, when do I think Elon would appreciate doing advertising?
I think they're going to do advertising at any moment, and when they do advertising, we're all going to go, oh, okay, they did it. I mean, it's like, why do we have to tell them you should be doing it today, not 5 months from now? Like, I trust them. They know what they're doing.
There's a lot of hyperbole in the advertising discussion. Some people think it's like, oh, do what GM does, or do nothing, and it doesn't have to be that. I do agree with the education portion of advertising. I think that could be immediate and something that they do. But yeah, do they need to have the advertising budget of a GM or a Ford? No, I don't think they need to do that at this point. I agree with Alexandra on the timing, and I would actually, I would consider the CyberTruck as kind of like a billboard, an advertising billboard that's going to bring people, when that thing's on the road, and there's many of them on the road, that's going to be a billboard that brings people into the Tesla store and say, oh, I want to see this thing more, and kick the tires. And oh, by the way, there's Model Ys here, and there's a new Model 3, and let's look at those for some other member of the family or a friend. So I think that's going to serve, and that's going to help.
Yeah, absolutely. And the main goal of this show today was to make people brighter, and I think we did a great job of that. So I just want to say that.
Okay, so thank you. But so let's continue back with the earnings call, which is happening tomorrow. And these are the questions. So we all understand guidance is what's most important, and looking forward is most important. We want to hear what they say, what they expect. So here's the questions that was brought up. I'm shocked here that the very first question that rose up to the top is a CyberTruck question, unless you guys think that actually makes sense. Can you give updated specs and pricing for CyberTruck? Any new features that will make it to production? Why do they ask this question at an earnings call? This will be announced at a product reveal or some sort of product reveal.
Yeah, I got a lot of lively comments on my tweet about that, but they're not going to launch the CyberTruck on the Q1 earnings call.
I agree. That's a terrible
really bad for
Tesla.
No, give a date. No, give a date. This is not it.
Next question. Do you still believe Tesla Energy will be bigger than auto? Oh, this is your question, right, Jeff?
Yeah.
Wow. You got the second question. How did you do that?
Yeah, maybe it's I own a lot of shares, one of the two.
Yeah, you got so Jeff owns 2 million shares.
Damn.
There's 2.8K votes. So yeah, no, I think, I mean, this is, I asked my question pretty early in the process. There wasn't really anything in there. I was actually sitting around when I saw the say email come in. And so I pinged this in there pretty quickly. So yeah, and then there's like 3 or 4 repeats of not this exact question, but just asking about energy. So I just think this is the mystery of like, well, what's going to go on with Tesla earnings this year? Well, this is the thing they really haven't guided on. Like, we really don't understand, where this is going. So what the question was like, do you believe in the long term still? So let's have them solidify that, because maybe they'll tell us something about demand. And then when we more formally launch it.
I'm confused, Jeff. Why would you, Jeff, ask the question, do you still believe Tesla Energy will be bigger than auto? What made you think that they did not believe this anymore?
Well, who knows?
I know I wanted to ask that question I wanted them to kind of reiterate where they see it is. So that's why I asked the question.
Herbert, that's a legitimate question. The energy business is a fraction of the auto. And if you believe auto is going to go to 2 million to 4 million to 8 million, yeah, energy is growing faster, but it's still a small amount of the revenue. So it's a good question just to get guidance. I think, Jeff, that's a great question to see where their frame of mind is.
If you said, do you believe Tesla Energy will be bigger than auto in 2 years? That would be better. Obviously, he's already said.
Well, Herbert, where's your question in the top 10? Mine's number 2.
Well, next time I will downvote your question.
He has no question because management knows everything.
It's great. Everything's going great. There's no, everything's glorious.
By the way, I have 2 questions in the top 10 or 11, I think.
All right. Well, let's see if we get there. You have 2 questions?
Yeah.
Oh, you have a lot of chairs. Okay. You previously stated a goal. to reach 80% of the Tesla car owners with Tesla insurance. When will the goal be met? What is the adoption rate? What is the average annual savings of a third-party insurance? So people care about insurance, and it's a top. Should this be the top 3 question? I mean, insurance is important, but I think it falls under that. There's 5 major businesses, and there's 11 major businesses. Insurance is like number 7 or 8. It's like way down there. Why would they?
Yeah, my eyeballs became glued to my eyes when I started reading the first 2 sentences. I was just like, oh, what's the next one? No, I'm just kidding. Insurance is important. I'd be interested for them to talk a little bit about it, but I don't know if it should be the number 3 question when it's like not even close in terms of revenue right now.
Exactly. I mean, it's interesting to know, but I'm shocked that it's up there. Okay, so the next 4th question is, how well are 4680s meeting the expectations described on Battery Day? Fantastic question. How long will it be until the cells meet those goals? Was that your second question?
No, but I've asked this one before, and it was actually brought up in an earnings call. Okay, I've asked this exact questions. I'm glad you approve, Herbert.
Yeah. I'm just trying to see, because I'm going to be sad if your second question is another pathetic one. So let's see.
We'll see.
You watch out, guys. He's going to replace us all with Randy. It will be him and 3 times Randy.
I'm telling you, you think I mean, it's like I'm looking at Randy. It's like,
stop it.
What? That's not fun.
Okay, well, Tesla shareholders have early access to SpaceX IPO. Why is he here? I guess. Okay, no, actually, I'm sorry. I take it back. That's a great question.
No, it's not.
What do you guys think?
No, it's a terrible question. Why is that a great question? What does that have anything to do with Tesla fundamentals or Tesla business? Nothing.
I'm a Tesla investor, Christian.
That has nothing to do with Tesla's business. It's an earnings call.
Herbert's interested in the answer, so
I can get richer call.
Yeah.
Come on, Herbert.
Okay.
You're slacking today. You're slacking.
Why am I criticizing questions? That's a good point. Why am I criticizing questions? I don't know. Just having fun.
No, I criticize. That's a bad question for an earnings call. That is not an earnings call question.
Okay.
You're right.
Well, we're criticizing questions. I reserve to criticize the next question from Jeff, but the rest I won't criticize anymore. Okay. When will Tesla allow owners to transfer FSD from an old Tesla to a new Tesla?
Every time, and they won't do that.
Okay.
Definitely not mine.
Can you provide updates regarding solar roof productions? These are the questions that made it up.
Okay, so that's a great segue. Look, I'm a positive guy. again, but I listen because I'm a good investor and I listen like a hawk. Elon Musk, a couple years ago, talked about solar roof being this killer product. He said it was going to be millions of solar. It has not happened. I understand there's reasons why, but he said that this would happen, and it's not even close. And that was a few years ago. So all I'm saying is, the more you keep saying something's going to happen, and if it doesn't happen, the less likely maybe no one else, the less likely I am to believe it. Okay, I'll just put it there.
I have an answer to you. What happened?
Okay, go ahead.
You want to know?
Yeah, absolutely.
You want your brain to explode?
Yes, I love it.
Okay,
I love being educated.
Tesla bought Solar City, and then they're rebranding themselves as Tesla Energy, and then they were saying that they're going to have solar roofs everywhere. And I think that the joke is that it was 1,000 solar roofs per day, and they're right now at 18 solar roofs a day. That was the Tesla Q showing that. Okay, so here's Elon saying something that never happened, which is what you're saying. Okay, no, but the reason why they did that, he said what I'm saying. I'm not Tesla Q. He said the solar roof. No, it's all true. I listened to it. It's all true. But the reason why this happened is in purpose. Tesla purposely decided not to sell to solar roofs to consumer retailers anymore. They fired the project managers. They canceled the agreements that they have with retail owners. Instead, I believe solar farms, they're going to take all those solar panels and they're going to put it on solar superchargers, number one, and two, corporations, headquarters, roofs of companies' roofs, and they're going to use it for solar farms. And so that's why I think that they're doing that. Fair enough, and that may happen. The only reason I bring it up, again, because I'm a student of this, it was a separate call. It wasn't even on the earnings call. Elon did another special call right after the earnings call to talk about the solar roof products. That's why it's right in my mind. And I remember that being a specific thing. So that's why I mentioned it. Yep. Okay, next, what happened to my screen here? So the next question is, when do you see the energy business being large enough to report separately? Beautiful question.
Yeah, and this one is really, I'd love to see that, because first of all, it would completely change the perception of Wall Street. It wouldn't be a car company anymore. It wouldn't be a question whether it stays in consumer discretionary, which I would love to leave because I hate that bucket. I would actually bring a lot of index funds who would have to reshuffle and buy much more if suddenly this would become either in the energy or in the tech sector. But I think it would help us all understand about these deferred revenue models in the energy sector. It would also help us understand what were the prices of the ones currently showing up now in Q1, were those already the ones sold at 2 million, or were they at the lower prices? So I really hope they're getting into more detail reporting on energy. I just got schooled here. Solar roof tiles won't be used in solar farms. It's from a user called the Solar Future Enthusiast, so I think I'm wrong. Have you ever been right? Have you ever been right? No, just kidding. Thank you, Solar Future Enthusiast. Okay, all right. Come on my channel. Teach me. All right. Next question. Take one of those interview slots. Randy. Can you see it, Herbert? Randy. And Herbert, you're free to replace me at any time you like for the next show. You're free to bring in a proper bull. No, we want you. You're awesome. Okay, with all the recent positive news and Megapack product expansion, can you give an estimate on how much you think Tesla Energy will add to overall revenue this year? Beautiful. That you, Jeff? No, it's kind of repeat energy questions, though. So, I mean, the question is split out energy and explain where it's going. Exactly. So there's like 4 of these in the top 10. Everybody else should have not done it. Okay. By the way, I do have an update. My question was voted to the number one on a share basis. Look at that. On a share basis. That's okay. Number one is number one. Herbert, you should be privileged that Jeff is here with the number one question on your show. Yeah. Well, next time, Jeff, can you consult with me so I can tell you what question to put up there? Yeah.
When will Tesla's heat pump tech be ready for residential applications? Yeah, I like this.
Is that Herbert's question?
No, but no.
See, okay, I'm going to give my point of view again. Some of these questions that are like, 20, 30 questions, they're fine. This has been asked a million times about heat pumps and HVAC. That ain't happening anytime soon, okay? I don't think. So I might eat my words, but I don't think that's anywhere in the remote list of the scale. HVAC is not on there. So why we keep asking about HVAC is beyond me. That's stupid.
I think Christian should be in investor relations. So I think that's how you should answer that question, actually.
No.
True. And then once and for all, and then they're gone, right? Completely.
Martin, if you're watching.
Keep Christian away. Investor relations who doesn't trust management. That's what Elon said, but if I were you, I wouldn't trust what he just said.
No. I trust management. I want management. Yeah, I'm not going to go back over it.
This is Jeff. See?
Okay, go ahead, Jeff.
This one moved up to number 7, by the way. It was 11, moved up to 7.
Okay. What does it tell me why you asked this question? Go ahead.
So basically, are you outpacing? Basically, I'm asking, are your cost reductions outpacing MSRP reductions? And
yes.
and
that is a great
to your liking, and for the foreseeable future. So it's one thing around your COGS reduction, like what you're doing in your 4 walls and your suppliers. The other question was around deflationary input materials. So like those two together, is that outstripping the MSRP changes or not?
Great question. Fantastic question. Number 1 question. I'm going to vote that up.
Oh, we got one.
Okay. Herbert's bringing his stock in now. You'll see. It's going to go up.
Oh, yeah.
Can we go through that slide that you prepared?
Sure. This was my proof that I did my homework, because despite the fact that I didn't come up with an earnings per share estimate,
good slide.
I was so stuck. Thank you. I was so stuck in not finding the ASP, the average selling price, and then just not getting anywhere, and having to do this hypothesis and this estimation. I said, no, there's no point. But then I reasoned myself and told myself, how about you just fill out good old SWOT analysis? And so that's what I did. And it doesn't show like that because some stuff needed 2 lines and some needed 1. But there's so many more strengths in the coming quarters to come for Tesla than weaknesses or threats. I mean, the threats are competitors and the macroeconomy, and we can't do anything about, the competitors, we know that they are far to go. But macroeconomy, we can't do much about the Fed. I wish we could. But the weaknesses are really just about our incapacity at the moment. Tomorrow we may be more clever to see how this all triggers through financials. So do these price cuts make for a good basket of average selling price? Is there still, is there still room? Does this unpredictability of the auto gross margin become actually tomorrow confirmed to be and remain over the 20%? The cost of inventory, I don't think, as we said with Jeff before, up to 20 days, this is negligible, but whatever. And we all should know that we're now moving into the period where we have now a normalized 15% tax. Tesla was very, very, for a long time, very privileged in having lower tax rates. So we're now moving into a 15% more normalized tax rate. So these are weaknesses, but these are weaknesses we can work with. While the strengths are so strong, they're obviously on the improvement of market share. So when I talk about market share, I just want to make sure that we all understand, of course, Tesla's market share is going to go down because competitors are entering the market, but I don't think it's going down as low as analysts predict. I think actually the market share is improving compared to expectations. The gain in efficiency is just, it's a beauty to watch, and it's all over the place. It's obviously in the supply chain, it is in production, and it is in also probably in efficient pricing. The stable supplier base, I actually wrote that down yesterday when I listened to Jeff and Herbert. The whole vertical integration, which is getting even stronger. Yesterday, I was actually sitting in my car in my X when Jeff and Herbert were talking, and I was screaming at the screen saying, say tier 6, because we all know that they're not only addressing suppliers in tier 1, who then will trigger it down to tier 2 and tier 3, whatever. Tesla is going straight away to the source. And if they can't, well, then they're vertically integrating it. The whole new product rollout coming out, the energy ramp happening, enormous interest income. I mean, they are such a cash machine now. We will see tomorrow millions of dollars earned again just this quarter because they could place their cash at 4.5% or 5%. Cash flow, I'm not even talking about the strongest financials. I'm looking forward in 4 weeks. I'm going to do my table again, even though we're now investment grade from both rating agencies. I want to continue doing the comparison with the 30 largest mega caps and the 10, 12 competitors, just to show how strong Tesla financials are compared to everybody else out there. And Forex is actually giving us this time a tailwind. So we're going to have some positive impact from foreign exchange and obviously no Bitcoin impairment. So I'm so positive on the company for the quarters to come that I just decided that I don't really care much about what's happening tomorrow, except, if it's really a huge catastrophe. But all the rest is just, I'm reassured.
Yeah. And for the record, I love that, Alexandra. And I don't think tomorrow is going to be, a huge catastrophe. I think it's going to be fine. It's just, we have to be realistic about the environment Tesla's in. And, it's okay to just, it's a tough spot, right? It's hard to be in a car company right now. I know they're not a car company, but right now, that's a lot of their revenue. So we own stock. So we don't want, the stock to crater because we have some type of event in the economy that hurts car purchases. That's all. Yeah.
I just want to add, because I saw the comment there, somebody saying Bitcoin is up. Yes, Bitcoin is up, but the accounting rule they choose or they have to obey to is that they have to value Bitcoin at the lowest point of any quarter. So I think it went down to, what was it, 16, or I don't remember. I don't follow really Bitcoin. And then once it's there, you can't value it up anymore. Then that's your valuation point until you sell. So it's not as if we are now filtering through potential gains in the Bitcoin. It is now stuck at that lowest point during the holding period.
That's true. But Alexandra, maybe they did sell. Remember, they did a surprise sell that went up. They could have sold somewhere in the quarter. Yeah.
True. But I mean, at the moment, there's only tailwind. That's why I said there's no headwind from that side.
It's curious that your threats are macroeconomy and competition. Sounds logical.
There's nothing. Yeah, but there's not much, right? And I mean,
but why? I guess. Mm-hmm.
That is logical. I mean, Tesla's not operating in a vacuum. We do have competition in China with NIO, Xpeng, BYD. And to be honest, again, I'm just stating facts. Tesla's in a league of their own. That's why I hold them to a high standard, because they are such a great company. The market share in the US has gone down from 75% to 65%. And Alexandra's 100% right. As more EVs come from these other companies, it is going to, bring down the share. But if it continues, goes to 50% next year, that just means, Tesla has to up their game even more, right? Because a lot of people are trying to get into, getting a better product out there. And I agree. I don't think they have any competition right now, but there have been some nice vehicles. Hyundai, I've seen their vehicles. It's not a bad EV, the Hyundai one. So, there is some stuff coming that nothing crazy, but I'm just saying to be aware of. Yeah.
And the other thing I didn't put under the threats is obviously if there are, world wars, or if there are, any black swan event again. Of course, those are. Those always in those.
Those are threats for every company, and exactly. We talked about how in a macroeconomic downturn, it's actually because of Tesla being where it is. It's actually a positive. It's not necessarily a threat.
Well, I can tell you, we wouldn't have interest rates at the levels we have. The stock price wouldn't be at 185. I mean, there is opportunity to everything. I grant you that, but the macroeconomy, as we are at the moment experiencing it, has a clear impact on the stock price.
Okay, so weird question to you guys, but do you guys feel humbled? Do you feel
we know
like
we're replaced
confident?
next week by Randy. No, we're humbled.
Humbled in what way?
about
Explain that.
about your confidence of understanding this Tesla business, and this, with the stock crashing the way it did last year, I don't think any of us anticipated it. And then when you become humbled because of that, how confident are you when we talk about what we think is going to happen next year?
I'll say I'm confident in Tesla, in the business, but I think this year, and we've talked about this, this is nothing new that I've said. I've heard Alexandra say it. I've heard Jeff say it. It's a tough environment for this year for Tesla to execute the business. It's been a tough environment, COVID, and they do amazing. I've never seen anything like it. But what I'm saying is you can't just put blinders on and think Tesla's going to do 2.1 million vehicles this year, 2.2 million vehicles this year. If the Fed continues to raising rates, which makes car purchases more expensive for consumers. I'm just being realistic about it. It's going to be hard to hit those kind of numbers in this environment. I may be wrong. Maybe they put up 2.1. Maybe they put up 2.2. I don't see it. I see more of a number of 1.8 to 1.85. That's my number for this year. And if they do that, I think that's a great year for Tesla.
I mean, I'm humbled. I try to be humbled all the time, but let me put the question differently. I had a good friend asking me, she has money for a year. Should she put it into Tesla? And I said to her, I wouldn't. If it's really only for a year, if you need this money beginning of 2024, I cannot, give you with all confidence that the stock price will be higher in a year than it is today, because I think it is going to be a tough year for a lot of things, not only Tesla. And so if somebody wants, in that case, a 5% CD, whatever, deposit at the bank, whatever, you can't argue with these people, and you can't make them run into a stock. Now you have 3, 5, 10 years. There is no better stock to purchase today than Tesla. There's just no doubt about it.
Yeah, I like those points. And I was just going to say, I've lived through, 50, 60% drawdowns before. This one, I think, got over 70, and it was rather, it felt like a very long time when we were inside of that drawdown. And then with macro happening, and then with some micro issues happening with Tesla in terms of China, in terms of, what's going on with management and so forth, at the time, it did not feel good. But when I look ahead, I'm looking at the fact that they're going to have now these 4 factories ramped. And I actually look back at that prior year where all these things were happening, commodity inflation, COVID, all these things were spinning. They had to raise prices. Demand was still growing. And the fact that they were able to raise prices allowed them to ramp the Austin and Berlin under the guise of like, hey, our prices have to go up, because of what's going on with COVID economies. Meanwhile, they had the opportunity to really bring these factories to scale with elevated car pricing. Remember, Model Y is going back to where it was when it started, going on sale. So I think people have to kind of take a 10,000 foot view of this, and nobody likes to see the price cuts, but I guarantee you the COGS to build a Model Y have come down precipitously from the launch quarter. And I think it's only about a third of the way through its journey. So when I look ahead, I think they're going to continue to drive COGS. I do think there'll be some compression in the near term, but I think they'll be able to drive COGS down really well. And nobody's predicting a deep, recession, but nobody can really predict where that's going to fall. But we've seen what happens with auto in past recessions. But in past recessions, we didn't have the secular growing component inside of auto that we have right now. So there's things on the pro side, there's things on the con side. I think you just have to continually weigh them and then figure out what kind of investor you are. And because there's not one answer you're going to get from this show that's going to meet the needs of the thousands of people that'll watch it. You've got to kind of self-assess, where you're ready to take risk. And the final thing I'll say is just around, there's not a company that's releasing a product with the kind of anticipation. Actually, I don't think in any category, releasing a product with the anticipation of CyberTruck. And then you've got that, and then you got FSD. When would that go to full release? I mean, there's a couple of really exciting product offerings. We haven't even talked about Gen 3 that are just waiting in the wings. It just seems like Tesla's continuing to one-up themselves.
Yeah, and real quick, I love those points, Jeff. And I'm an educator. I love to talk about history, and I love to talk about investing. And Alexandra, I'm going to kind of pivot off of what you said. Tesla stock price in November of 20 was higher at some point than it is now. So that goes to show you it's like 2.5 years, and you're not up if you invested at that time, which is a long time. So to your point, Tesla is not an investment for 6 months, a year. Like you have to have the wherewithal to hold for 5 years, maybe 6 years, 7 years before you see a lot of these businesses that Herbert talks about, these 10 growing businesses, to come to fruition. So if you don't have that mindset, and a lot of investors don't, I understand a lot of people in the community do, but I just want to say, like, when you invest in a stock, it's like if you're going to be a long-term holder, that capital, you almost have to pretend like it's gone. Like it's not yours anymore. You've given it to the company so they can do what they need to do to invest or whatever. It's almost that kind of mentality. And that's not a lot of the mentality of most investors today. Most people are trying to get in. Maybe they hold it for a few years, they sell for a profit. So this is a unique type of company where the upside is huge, but you need to give yourself 3, 5, 10 years to let these stories play out. But I'm speaking on, because you're asking about, we're a show that talks about the stock near term. You always ask about that, and quarterly results. So we also have to be more realistic in the short term. So even though I sound like a little bit bearish in the short term, that doesn't mean I'm long term not bullish in the long term. So I just want to get that across and get that.
Yeah, and I have a question for you, and I'm sorry, this is probably a bit late to discuss this, Herbert, but let me please bring it forward. Christian, why is the VIX suddenly so low? Why are we down to 17? And is that a good window to now buy leaps? I mean, I know we discussed last week, and you weren't a big fan of purchasing leaps yet.
No, I love the question. I'll just give you my opinion. So I think the VIX is down because the banking crisis that everybody was so panicked about is kind of now dissipated. So everyone's been complacent. So to me, that's a negative, right? Because when the VIX gets this low, the only really place it has to go is to get more volatile. And usually when you have volatility, that means the stock market's going down. So this could be a moment where everybody's thinking we're back in this bull market, but we still have the Fed raising rates, right? We still have the consumer. So something might be coming that no one's expecting, because I think the bearish sentiment has kind of turned a little bit to a bullish sentiment, right? Everything's okay. Where's this recession? I keep saying, everyone's saying this is the most anticipated recession in history. And I get that, but all the data, we still have an inverted yield curve. The bond market's moving back up again. I don't want to get into all that, but what I'm saying is there's still a lot of risk out there. Now, maybe everything goes well and inflation comes down and the Fed does the soft landing, but it's still a tough order. And to your leaps call, I don't think that's a terrible strategy, because you can get out 2 years plus with some leaps, right? Depending on when you buy and when they come out. So if you want to take a little bit of portion and you want to say, hey, I'm pretty confident in a couple of years, Tesla being over, say, 280 or 300, maybe that's a good spot to buy leaps at a strike price at 300, because we're just under 200. So it gives yourself 2 years, but it's still risky, because if you don't trade the leap and you don't buy and sell it, and that leap is not at that price plus, because remember, you're buying the leap. So you don't need it at 300. You need it higher, because you have to pay for it too to make a profit. And most people don't actually buy the shares at the leap. At the end of the leap, they probably just sell it. Right. So if it's not there, and we do have something that comes out of the woodwork, and in a couple of years, it's not at that 300 price, all that money goes to zero. So again, if you're a long-term investor, I would say buy the shares, because if you have a 5 or 10 year horizon, that money will participate in the upside, where the leap will not. If in that 2 years that leap doesn't make it, it's not there for the rebound 3 years later in that 5 year window. So I would just say, be careful, know what you're doing, and if you make an informed decision, that's fine, but just understand what you're doing.
Yeah, I just thought the VIX being so low, that may be the moment to really consider it now again. And okay, well, thanks, Herbert, for letting me throw this in.
No problem at all. That's fun. That was fun. Okay, we were waiting for Gary to come. It would have been great to have an analyst here, but tomorrow's earnings day, we've had a chance to play around with what we think. the end of the day, we're all long-term bulls. So we pretty confident. It's just fun to figure out what happens next quarter. But thank you, everybody. That was fun. Let's hopefully we're going to have a party tomorrow. But if not, part and parcel of what we've been experiencing the last year.
It's going to be what it's going to be. Yeah.
And we'll be back next week, or Randy. or Randy.
I'll be so happy next week. We're friendly. And Herbert, I won't say a mean word the whole show.
We'll put masks on.
No, you guys never do. You guys
I was just being realistic.
Right. Yeah. Thanks, everybody. Bye-bye.
Thank you.